Hello guys, it's Dale here. In this video I'll show you how to place your take profit using volume profile. This is my favorite way of finding the best place to place the take profit, and I'll show you on a couple of examples. And the first one is going to be the ES, which is futures for the Standard & Poor's 500 index. So let me start by drawing a volume profile over this zone. Potential short from here based on those heavy volumes, but in this video I won't be talking about entry points. This is only hypothetical example because on this example I want to show you how to place your take profit. So if you imagine you went short from here, and now you need to determine a place where to take your profit. Oh, there's one thing I haven't said yet, but you're looking at a 30-minute chart here, but it doesn't really matter what time frame you use, as I'll show you later, because later I'll be talking about daily charts. It doesn't really matter because this method is independent on the time frame, and there's only one rule to follow when looking for the best place for your take profit. The rule is take profit needs to go a little bit before heavy volume zone. So what it means in this case is that you look into the area where the price was coming towards your short level, towards this place where you went short from. And what you want to do is look with the volume profile into this area. So if you do that, then the volume profile will show you the volume distribution in this area where the price was coming towards your level, and you want to look for significant volume zones. And what I like about volume profile is if you look at it, you know right away, because it is super clear. In here, there is this heavy volume zone and this heavy volume zone. And you want to place your take profit, at least your first take profit, at the beginning of the first heavy volume zone. So in this case, the first take profit would be in here. So this is where you go short from, and this is take profit number one. Or this could actually be your final take profit, but if you are used to taking more profits, I mean like splitting your position, for example, into two halves, then this should be your first take profit, because the price hit the first heavy volume zone, and such heavy volume zone could potentially work as a support, which would mean that the price could potentially react there and turn. In this case, the price reacted there, only the reaction wasn't too strong, but still you can see that there was a reaction. So this is potential support, and that's why you want to exit your trade here. So this is why you want to place your profit in here at the beginning of that support, which is marked by that heavy volume zone. So as you can see, here we applied the rule, the only rule for take profit placement. You place the take profit at the beginning of the first heavy volume zone. Now, if you prefer trading with two take profits, I'm personally not into that too much, but a lot of people do that. So for those people who like trading with two halves of a position, then the second take profit should be in here, the beginning of the second heavy volume zone. Right? As you can see, it is pretty simple. This is take profit number two. And the reason why you should quit the second half of your trade here is, again, heavy volumes can work as strong support or resistance zones. So it would be risky to try and go and trail your position, trail your trade past that, because this is potentially very risky and the price could turn here. As you can see, in this case, it did turn here. So in this case, it would definitely be best to quit your trade here. So this is the example I wanted to show you on the current development of the ES. Now there's one more example on a 30-minute chart, and that example is on the British pound. So this is 30-minute chart of the British pound. In here there is a significant resistance. It is at 1.2149. Maybe this resistance seems familiar to you because I sent you a video earlier today about this resistance. So that's the resistance. It is based on those massive volumes accumulated in here, and when the price reaches this resistance, I expect a reaction. But this is not the point of this video. The point is telling you what the ideal take profit would be. Volume-based take profit, I mean. What you want to do, as I was showing you in the previous example, you want to look into the place where the price was getting towards your resistance, right? This is it. This is where the price was getting towards the resistance. So you use the flexible volume profile over that area. Hypothetically, if the price went upwards quickly like this without making any significant volumes in here, then the first significant volume zone would be this one, right? And that's why this would be the ideal place for a take profit. So if you went short from here, then take profit should be at the beginning of that heavy volume zone, right here. All right, so this should be the take profit. It's pretty simple, isn't it? You just need to look at the recent area where the price was going towards that resistance, and then identify the first heavy volume zone in line. In this case, there's also one thing. It is a sort of a bonus, but if you look at this rejection in here and this rejection in here, those are reacting to this level, and all this means that this level worked as a resistance in the past, and if the price blew past that resistance, if it does go past that resistance now or early tomorrow, then this resistance will work as a support, right? So we have price action support here, potential price action support. It's not a support yet. The price would need to go past it for this level to become a support, but if the price goes past it, then this level will turn into a support. The price action will tell us that this would be a support, and also this significant volume cluster would tell us that this is a support. And where else you want to quit a short trade than on a significant support? Because at this support there is a high risk that the price will eventually turn. So this is the place to quit your short. Makes sense? I hope it does. It's not easy to explain, especially when the price is in here. It still hasn't made that move yet to this level, and I'm not 100% sure it will make that move here. I'm only saying like hypothetical example, right? But if the price makes a move to this level without any significant volumes in here, then this will be the first support in line, and this is where you want to quit your short. All right. Now, as I was saying, this method is not really bound to any time frame. I'm using this method not only for day trading, but for swing trading as well. So let me now switch over to a daily chart and show you how similar it is there. All right, so the next example is going to be a euro-dollar chart and a trade that we had with members of my trading course. So now we are looking at the euro-dollar chart, daily time frame, which means each candle represents one day, and the level we had with our members was based on those volumes. This was a short level, This is where the price hit the level, and right here, this is where we went short, right? This was the reaction to that short level. It may not look like a huge reaction, but remember, we are looking at a daily chart, so from here to here, it's around 200 pip reaction, right? Anyways, talking about take profit, this is where the price was heading towards our short level, which was in here, right? This was the short. So the thing to do is use that flexible volume profile here to look into that zone and identify the first volume cluster in the line to find the best place for your take profit. In this case, it is this significant volume cluster. So right here, this is the best place for a take profit at the beginning of that heavy volume zone, because potentially such heavy volume zone could turn into a support, right? As you can see, it really did turn into a support, and the price really reacted to that support strongly. And this is exactly why you want to quit your trade, your short trade in here. Because trading past this, trading past strong volume-based support is very risky. You don't want to risk that, because from here to here is like 150 pips. So you don't want to risk that. You want to bank your profit and be out of that trade. All right, so that's why I'm saying that the best place to take your profit is when it hits the first heavy volume zone, like in here. Now I have one more example before I wrap this video up. It's on the Canadian dollar Japanese yen. Again, it is a daily chart. Again, it is a trade that we were trading with members of my trading course. Let me zoom it in a bit. In this case, what we had on the Canadian dollar Japanese yen was a resistance based on those heavy volumes. This is the beginning of that heavy volume zone, and this was the resistance. This is where we went short from. This line marks the stop loss, but that's not really important for this video. What is important is the take profit placement. So what you want to do is use the flexible volume profile over the area where the price was getting towards your short level, right? You need to see how volumes are distributed throughout this zone. So let me use the volume profile again and show you the volume distribution here, right? This is how it looked when the price went towards the short level. What you can immediately tell is that this zone is very important, and this is the beginning of that zone, and this is where you want to take your profit, because potentially this could work as a support. This heavy volume zone could work as a support, and potentially price could turn, ruining your short from here, right? Ruining your trade. In this case, it didn't happen. Price went past take profit and reacted to a place where you could have placed your second take profit, which would be this heavy volume zone. This would be the second take profit if you are trading with 2/2 of the position, that is, all right? So potentially this would be the second strong heavy volume zone. And as you can see, in this case, the price really did react there. So in this case, the best place to take your profit would definitely be in here. But it's not that easy to read in this example. I mean the second take profit. But the first take profit, I hope you agree with me that it definitely stands out. All right, so those are a couple of examples how I use the volume-based take profit. It's a time-proven strategy that I believe is based on a solid logic. So I hope you guys liked it. I hope my explanation was clear enough, and if you would like to learn more about volume profile trading, if you would like to learn more tricks like these, and if you would like to trade alongside me every day, then what I recommend is visiting my website, which is trader-dale.com. If you click this button, it will take you to my courses. And if you are interested in volume profile trading, then what you want to get is the Elite Pack. This pack will teach you how to trade with volume profile in a 15-hour long video course. As I was saying, you'll be able to trade alongside me because you'll be getting my trading levels every day. And also you'll receive my custom-made volume profile indicators for various trading platforms, including NinjaTrader platform, TradingView platform, or MetaTrader platform. There's a video which you can watch that will show you everything that's included in the Elite Pack. And if you have any questions, there is a quick chat window, which you are welcome to use. Have a little chat with us and you'll have answers to your questions in no time. Alright, so that's about the video. Thanks for watching and I'll see you next time. Until then, happy trading!